Morning, everybody. It's the 15th of June. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Good morning, mate.
How you doing?
All good in the hood.
Superb. Okay, let's get straight into the headlines today then. So there's been a boost for transatlantic relations. First up, the European Union and the US are set to resolve a 17-year dispute over aircraft subsidies. That's according to the Financial Times. The pact could potentially be announced this morning, according to the papers, and Bloomberg reported a potential end to the tariff spat last week. So looking as though that's going to get sorted. Also, looks like the UK Prime Minister Boris Johnson and the Australian leader Scott Morrison last night agreed a broad free trade agreement between the UK and Australia. So more action subsequent to obviously Brexit, which is good. In terms of what's going on in the UK, it's of no surprise to anybody that's here that the UK postponed the plans to remove all COVID-19 restrictions in England this week. It was set to be stopped or ended on the 21st of June. But that's now been pushed back to July the 19th as more infections of various variants continue to undermine the UK's vaccination efforts. Johnson said he's pretty confident there won't be another postponement. I don't think any of us believe a word he says, but we'll have to wait and see. I think they've been pretty good in terms of adding some reprieves in there, particularly for things like weddings. Obviously, the 30-person limit will now be lifted and allow for a limited amount of guests to attend, as long as there's no dancing, which I have absolutely no idea how you're going to police. But
Well, you know what? I think that was one of the major incentives that came out of the speech yesterday. If anyone was to say to me, come to like a party, wedding event, life event, and there's no dancing, I'd be at it like a shot. So all for that.
Yeah, I reckon there'll be a few sham weddings going ahead over the next couple of
Yeah.
weeks.
Will you marry me, Joe?
Yeah, I definitely will. If it means we can have a party. Okay, what else we got? So Jamie Dimon, who is the boss at JP Morgan Chase, he's predicted a drop in quarterly earning trading revenue that was bigger than the Wall Street forecasts. He said that there's likely to be, the party's likely to come to an end, and that numbers will be more normal going forward after this big burst in volatility that we saw last year. So that may have an impact on what we see with the wider markets, although looking at things at the moment, that isn't the case. Stocks are higher today. US equities closed at another record, and that's ahead of the Federal Reserve meeting that's due to take place this week. So all pretty good on the equity front. One thing that I did see on the news today is that it looks like European stocks are on course to outperform the US stocks, which will be the first time in 7 years. I know we've still got 6 months to go before the end of the year, but obviously we're at the halfway stage, and so far the Euro Stoxx 600, which is the broadest European index, is actually outperforming the S&P 500 by just over 1%. So quite interesting. It seems as though investors have been attracted to Europe's greater number of value and cyclical stocks, compared to obviously what we've got in the US, which is very tech heavy, led by the Nasdaq constituents. So yeah, quite interesting. Steve, let's get stuck into some charts now, if you're ready. Do you want to kick off?
Absolutely. Just going to look at indices first, really. Obviously, blue skies, new highs, Nasdaq. It's taken a little while. It's woken up. We've woken up this little giant. Really, since the 4th of June, it's sort of like bounced back with a little bit of a bite. So I don't know what Diamond's talking about. It's never gonna stop going up. So from these hanging man candles, the indecision we saw, which was a bit of a concern on a weekly basis, on a weekly chart, we managed to post a couple of bullish hammers, and the impulsive move higher is continuing. Now, if we look at maybe a longer term chart on this, I mean, I don't really know what to make of that. Are we sort of like, is this wave one? Yeah, looks like it. Wave three, possibly. If that is wave 3, then wave 5 won't be very big at all, because wave 1 currently is bigger than wave 3, and wave 3 is never not never say never, should never be, or is not normally the shortest wave. So we expect wave 5 to be a shorter wave. So this all this exuberance, irrational exuberance, or whatever I might want to call it, is potentially, be a little bit aware of that, be careful with that. The Dow Jones, again, we've seen the hanging man, it hasn't really kicked on from here. It's still sort of overshadowed by these bearish candles, and really sort of looking at, even on the 4-hour chart, we've actually managed to break below the Ichimoku cloud, which is negative, and we've also broken below the previous support, which now turns into resistance, 34,327. We've got back above it. We've still got this previous support, and again that turns into resistance. Let's get it red on there. Double click, Stevie. Come on, you can do it. Yes, we've got a resistance there, 34,463, just rejected off there now. I mean, that line was drawn in before that rejection, so be aware of that. S&Ps, though, sort of like printing new highs, although the 4-hour chart is posting a bit of a shooting star candle. So again, be aware of that. So tech stocks seem to be enjoying the ride. FTSE, as you said, performing well, and it's not all-time highs in FTSE. I don't think, Joe, is it? I think it's this chart doesn't really go back that far, no. But we are above the highs of 10th of May 2021, so that was the high of the year. We've broken above it, but we seem to be getting a little bit of rejection. We've managed this 4-hour candle between 2 o'clock and 6 o'clock has closed above it, so that's good potentially. 8 o'clock we always get a little bit of a reshuffle, and we seem to have sort of like had a little pullback, but back to where we were and looking really to push out higher. We've got these ATR weekly levels in here, 7,222 offering resistance and 7,114 offering support, with 7,136 in offering an interim support, and we've got the spike higher from yesterday offering resistance at 7,192, just in front of 7,200. The DAX, again, expanding wedge formation on the weekly chart, which we talked about. The hanging man candles have been negated, so they, well, let's see, shall we, where the weekends, but that's looking quite positive from that perspective. New all-time highs, 15,790 there, looking nice on the DAX. On the Ichimoku cloud 4-hour chart, reacted nicely from the base of the cloud support and this trend line support that we had in here. So that trend line support and the cloud come in around about 15,600, and nothing in the way of resistance above, so looking quite cool. The Aussie 200 predominantly has a lot of commodity is influenced by commodities. We've seen the volume spike higher nicely as we push to new highs here, and there's nothing holding that back. That looks pretty good. However, here comes the spoiler in the party, China 50. Now, I keep talking about the China 50. For me, this is the one we have to watch. China 50 tends to lead when we do have, and it seems to be an early indicator. It's like a leading index indicator. And so we have to really watch this. This corrective channel, this looked quite constructive, really. Bit of a bullish flag, potentially. Corrective channel lower, but obviously news overnight, with China sort of like taking the brunt of a lot of things coming from the G7, and that has broken through support at 17,770. That will now act as resistance, so looking to initiate shorts if it gets up to there wouldn't be a bad approach. We can see the volume has spiked higher on this bearish candle. We've even managed to hold on to the 17,500 level, react higher. For me, a break below there, close below there on a maybe daily basis would be pretty significant, and that would sort of like lead me to be a bit cautious about these highs elsewhere across the globe. Hang Seng has followed suit and broken below the 28,630 support. We managed to get down to 28,408. That's the next support level. Really have to break below there to maintain the sort of like the opportunity of a bullish move. But this, for me, this head and shoulders formation has played out rather nicely. It was quite an extended retest of the neckline, but it's failed. So that potentially opens up a measured move target. We take the head to the neckline and go to there, and really that sort of highlights, well, you could say we've achieved the target by hitting 28,400, but the measure move target coming in about 100 points lower than, or about 50 points lower than that. Nikkei, this was my go to head challenge yesterday. Really blew this one. I was trying to sort of like set shorts in front of this resistance, and it's blown through it. So this nullifies the head and shoulders formation that I was looking at. From an Elliott wave perspective, a nice little impulsive move higher, really looking for the fifth wave and where it's going to come in. Resistance should come around about here, just in front of the 30,000, 29,700. So looking at that from a more medium-term resistance perspective. Moving on to commodities, and we look at oil and gold. Oil is looking still supportive. We had a bearish candle on the 14th, and it's been followed by, sorry, this is a 4-hour chart, bearish candle on at 3 o'clock yesterday, and this is followed by some more constructive price action. However, we do really need to watch this as maybe a pivot level, 70.42, so $70.42 on the WTI crude oil for me is the level to watch. If we maintain levels above here, should kick on, going for the measured move target on our longer term chart. We're thinking this is a fifth and final wave, and this should come in around about 76, just in front of 76.80. Again, wave 1 and 3 very similar in size. Wave 5 should be shorter. Then we should see an ABC correction lower. On gold, gold's having a bit of a torrid time of it. It was smacked over the last 3 weeks. We've reacted higher from a low of 1845 and trading around 1866 currently. This is looking pretty constructive, bit of an ABC correction, but so short term mildly negative. But if we recapture ground above 1870, I would actually flip that on its head and say we're mildly positive on the shorter term time frame. Longer term, medium term, I'm all gold. So looking at the cryptos now, I just did a video on cryptos. You'll be able to see it on the YouTube channel on the link below. Are we that clever yet, Joe? Don't know if we are yet. But yeah, so we're sort of like trading within a range currently, and this is potential for a head and shoulders formation. We've mentioned this before. I don't think it'll be an exact one because the exact head and shoulders formation actually has a measured move target, as I've mentioned, of minus 4,000. So that doesn't feel to me like it's going to play out. However, the neckline for that, 28,800 on this chart. Really, the 30,000 level is the supportive level psychologically, and it's reacted from there twice now, just above there the second time. But above here, I've really sort of like, we've got a couple of decent levels to watch. Now, this is what I think is an impulsive move lower. We could talk about where the fifth and final wave target is, around about 18.5, 20,000 for me. But what I wanted to highlight, maybe the 4-hour chart would really show what we're looking at. So we've got 3 significant lows here. We've got the spike low on the 19th of May, 23rd of May, and the 8th of June. So here we have potential for a double bottom. The neckline for that is 43,000. And that would be, if we manage to break above 43,000, I think that really opens up a potential for a move back above 50, maybe towards about 54, 55. Also in between that, we've also got another double bottom formation, and the neckline for that is at 40,904, which we're actually testing right now. So this is decision time. Are we going to break above here? If we do break and hold above here, again, we've got the potential for another sort of 1,000 points on the upside. So I'm sort of thinking if we break above here, then that should give us a little bit more momentum, take the 43,000 level out. The 46,000 for me is the real pivot area to watch, but could even take that out as well. We've seen volumes picking up a little bit on these moves higher, or is this just an AB equals CD correction and we're stopped here? For me, obviously, it's too tempting to not go for that on the gun to head. I am going to be selling Bitcoin, but a break above 40,900, and I think any people who have sort of set up short positions on this are in trouble. That's about it.
Lovely, comprehensive as always, Steve. Thank you. Let's have a quick look at FX then. So yesterday we saw a bit of indecision from the dollar index. It's had a strong push higher last Friday. It rallied into this resistance level at 90.62. So in order to see any more bullishness or follow through on the upside, we need to see this break. If we do, then we'll be targeting a move up to these resistance levels up here, which coming around about 91.43, which also marries up with this long-term downtrend line. So quite an interesting level up there to potentially target. But first of all, we need to break above these resistance levels here. So we're off to a bit of a weaker start today. If we look at how this looks on the intraday charts, it's quite interesting. I did this yesterday as my gun to the head trade. And I've left the trade in there, as you can see. So it was about half an hour on side come 9 o'clock close, but really started to make a move to the downside today. And as you can see, it looks to be trading in a bit of a range in the very short term. So potential for a move down to here somewhere, which is around about 89.80, 89.90. So we'll wait and see if any buyers sort of step in at any point to send this higher. Taking a look at what euro dollar's doing. So flip side of dollar index. As we can see, we've got some support here forming at 121.04. If that breaks on a closing basis, then we can potentially eye up and move down to these next support levels between 120.26 to 119.86. Potentially, if these levels break, then maybe what we're forming is a head and shoulders top, as I've indicated here. All very speculative at this stage. It needs to complete the head and shoulders top down at this neckline level here before we can get too excited about that, but certainly some potential for two-way price action in the short term. We could head up to this resistance level here at sort of 122.43, but I'd be watching this level here with interest if we get a break below 121.04, and of course that's going to be dictated by what happens with the dollar index from now. Looking at cable, not much happening yesterday. Very much an indecisive session, bit of a move to the upside today, but I'm still looking for a move down to this kind of support between around about 139.85. Reason being, there's an unfilled gap between the 7th of May and the 10th of May, and also it will marry up quite nicely with this uptrend line. So looking for a bit of downside weakness there, but as you can see over the last few sessions, it's not really gone anywhere, and that can cause difficult trading conditions if you're looking at cable, because there's no real follow through in either direction. So if you've been trading in that range, I imagine you've just been chopped to pieces. So be careful if you're going to persist trading that in the short term. Elsewhere, what have we got? Euro sterling, pretty similar. Anything sterling related is all pretty choppy and not going anywhere at the minute. This seems to be trapped within a range between 85.60 to 86.65. So, for a short-term strategy, maybe look to buy at the lower end, sell at the upper. Dollar yen, what's going on there? So again, this is my favored dollar play if you are going to play the dollar on the upside, just because the yen's been so weak. It's trading in a nice uptrend channel, which seems to be attracting buying interest every time we dip back to it. Nice move to the upside yesterday. Not really much happening today, so sort of consolidating on those gains that were made yesterday. I fancy it to move higher towards 110.96, 111 on the nose in the short term. Dollar CAD was quite interesting for me. If I scroll back here, you can see how this has been trading in a really bearish channel since March last year. Potentially some sort of bottom formation taking shape, although it's a very narrow and shallow bottom. We are trying to break above resistance at 121.44, potentially for a corrective move to the upper end of this bearish channel. So all very corrective. Clearly the overall trend remains bearish, but I quite liked what I was seeing on the intraday charts here as well. This is the hourly chart. Just this alone, following a move to the upside, we've seen a consolidation back. Seem to be finding some support around here, 121.31. And if we scroll back to the left, we can see that previously this was a resistance level. We saw the breakout, we've seen the pullback to retest, and it seems to be holding quite nicely. So I think that looks okay maybe for a continuation to the upside in the short term. But again, it will be dictated by what happens with the dollar index. So that's pretty much it from me on the FX side of things. Let's have a look at the gun to the head trades from yesterday. As Steve mentioned, his trade on the Nikkei didn't work out too well, but he's got some credit in the bank following his humdinger the day before on gold of 8.4R, and we had a 0.5R win on dollar index yesterday. So all in all, we lost half an R, which isn't terrible given that we had a stonking day the day before of over 11R. So hoping to get back on the horse today with some winners. Steve, we all know what you're going for. Do you want to talk us through it?
Yeah, as I've just explained, I'm sort of really sort of having a bit of a can say it's a bit of a punt, really, can't I? On
They all are.
Yeah, on crypto, on Bitcoin, fading in front of this 41,000 level. For me, that's a significant break level. If we break above that, I do expect it to accelerate quite higher very quickly. So based on my overall consideration that we are at the top of this corrective move, I think I'm going to fade it. Getting short here, 40,371, targeting 35,350. Let's get them over here. Stop at 41,371. So there we go. That's my idea. 5 to 1.
Beautiful, lovely. I'm going to take a look at dollar CAD. As I mentioned, I quite like the intraday sort of setup here. This is the hourly chart. We were clearly formed some resistance, maybe a bit of a range, saw a nice break to the upside and a pullback in recent hours. So I'm going to buy that now. And in terms of what I'm going to target, I'm going to look for a measurement from those lows to that high from the breakout point projected higher. So I'm looking for a move up to 122.57. How does that look from a risk reward perspective? So let's buy now at 121.40. Target 122.55. We'll just go in front of that, and a nice tight stop there of 20 ticks. So looking for 5.5R on that today. That'd be nice, wouldn't it?
That would be lovely, mate.
Okay, cool. So is there anything that's going to impact these trades today from a macroeconomic perspective? Let's have a quick look. So 1:30, we've got US retail sales. We've also got Empire State Manufacturing Index, which is due out at 1:30 as well. We've got some UK jobless data, which was out this morning. There's a sharp decline in that to 92.6 thousand, and a lower employment number as well. I think we've got the Bank of England governor speaking today as well. And he was speaking yesterday, but didn't have any impact on the markets from what I can see. So, yeah, a bit of a quieter day, but a couple of bits to keep us interested. And I think that's pretty much it, Steve.
Yeah, lovely.
Lovely. All right, guys, good luck to everybody trading today, and we'll be back in the morning.
Cheers.
Take care. Bye-bye.